Well, we've returned back to the markets. Of course, many markets were still open yesterday. It's just the equity market which took a breather yesterday. But, we are expecting the market to open about 9 points lower. The best way, I think, to conceptualise that is having a look at SPI futures from the close at 4:10 on Friday. Now, of course, we know they were open on Friday night for the SICOM session. We know they were open again last night in the SICOM session as well. But the absolute change from 4:10 on Friday to where we are now is down about 9 points or so. S&P futures in that same time zone from 4:10 on Friday, down about 20 basis points or so. So we are looking for a fairly damp, soggy start once again to the Australian market after certainly last week's, fairly hefty falls on the ASX 200. What's going to drive us today? Well, it's pretty unclear, to be honest. We've got US crude up about 1% from that close. Iron ore's a touch weaker. Not really giving us a huge amount, but if you look at BHP's ADR, it's down 1.2%. Now, of course, the big talking point that we've been seeing at a macro level is really this big rotation out of tech into energy, into financials. US financials, if you look at the XLF, which is the financial sector ETF, looks quite attractive at the moment, although there was a bit of indecision in the trade last night. And that's going to be very much a talking point as we go into Thursday morning's FOMC meeting, where I still believe that the market, at least in the interest rate complex, is still underpricing just how aggressive the Federal Reserve are likely to be with moves in the Fed funds future, or the Fed funds rate over the next few years. Obviously, people are speculating they're going to use their balance sheet much more aggressively, but certainly, the Fed is still running with the idea that they're going to be raising rates, say, 8 times over the next few years, where the market's looking for somewhere about 3 hikes. So certainly very pessimistic relative to the Fed's medium projection, which of course can change. But certainly the talking point has been in tech. Now, is that going to be a much longer prolonged downtrend that we're going to see a much bigger drawdown in the market? Obviously that's yet to be seen. And I don't sit in the camp that we are seeing reflections of 1999 at all. But we have seen some buying coming off the lows in the Nasdaq and certainly the US tech space overnight. If you have a look at the FANG baskets, the Facebook, Amazon, Netflix, Google, those kind of names, they have seen some buying overnight, but there's been some massive open interest, specifically on the short side. Now, whether those guys look to cover anytime soon is yet to be seen, but that's an element that we're going to be watching throughout this week. Now, in terms of the talking points, well, clearly, as I said, the Fed's going to be a big mover this week, and the US dollar, therefore, and the Fed funds futures and the US yield curve are very much going to be front and centre. But domestically, we don't have a huge amount to drive. We've got NAB business confidence numbers coming out at 11:30. I don't expect them to be a driver of market moves at all today, and the Aussie dollar looks very comfortable where it is at the moment, just above 75 cents. Perhaps the employment numbers later on in the week will be more of a provider of market inspiration, but again, I think it's mostly going to be down to the US dollar side of the equation. The other event which I think is well worth watching is the US CPI numbers that come out also on the 14th for us, and that's going to be an interesting one as well. If you look at ex-food and energy, we're expecting core inflation to be around 1.9%. Obviously, the Fed look at PCE above this CPI basket, but I think the market will look at this. If you do get a number nicely above 2%, I think people will look at that Fed funds curve and say, well, it's a bit too pessimistic. But ultimately, we start the day on the equity market afresh again. Healthcare still seemingly is our market leader, but I want to have a look at what happens with energy. I want to have a look at what's happening in the banks, because the US banks are moving higher. Will we see that replicated in some of our banks? And certainly Aussie banks will be in focus with the Fed later on this week.